everything's off the table. I mean, there was a Powell pivot in 2019. I mean, Powell tried, when Powell first got into office, he actually tried to tighten. He wanted to go back to a smaller balance sheet. And, the bond market threw up on it and said, no way. And he had to pivot, right? And then COVID came along and they, there was a crisis there and they pivoted again. And in 08, they pivoted. I mean, if we see the markets indicating that there's true failure in the financial system, they've only got one tool, Natalie. The tool is the printer, and they're going to just run it hot. And so whether it's ZERP or, maybe they take it to 3 or 4%, who knows? But we know they have to create more monetary units mathematically or else the thing collapses.
Lawrence Lepard has predicted a global financial crisis for years. Lepard believes careless borrowing and spending are destroying the fiat monetary system. Lepard expects central banks to print a record amount of money in response to the impending crisis, far more than during the Great Financial Crisis and the pandemic. Lepard details this urgent issue in his latest book, The Big Print: What Happened to America and How Sound Money Will Fix It. This work examines how inflation and fiat money hurt the U.S. economy and stresses the need to return to sound monetary principles. The current system of excessive money printing and rising debt has caused inflation and wealth inequality, he claims. Lepard believes sound money practices like gold and Bitcoin could restore financial stability and prosperity. Lepard stated in a recent interview that larger interventions that go beyond what any politician is willing to undertake, are needed to effectively address government spending issues, despite the Trump administration's efforts. Lepard reiterates that turning on the money printers is the only option since no immediate solutions exist. In light of decades of reckless borrowing and spending, the intervention must exceed all previous Federal Reserve actions, including the trillion-dollar bailouts during the Great Financial Crisis. Before we share segments of Lepard's enlightening conversation with Natalie, please like this video, subscribe to the channel, and enable post notifications for more content like this.
Possibly. I mean, I think that's what I think, I think it was easy to criticize on the outside. I think now that he's in there, and this is what Luke has said, and I agree with him, I don't think there is a market for the long bonds. I think he realized he's got to keep it short because he can't sell the long ones. There are no buyers. I mean, look, in my opinion, we are in a sovereign debt crisis. We are at the cusp of the gradually turning into suddenly phase. And the two best data points to support that are that the U.S. Treasury bond used to be the base layer of the financial system for years. It was a safe place to put money. It wasn't going to get debased and you earned a yield. Okay. Since 2020, in Treasury bond terms, gold is up 200%, Bitcoin is up 2,000%. That, to me, those are canaries sitting there keeling over in the coal mine that, like, we got a problem here. We got a serious problem. And so, but yes, I mean, I found it interesting that Besant got in there and he said, oh, all the gold is definitely there. He had to have been read in on that. There's no guarantee. He doesn't know if that gold is there, and neither do we. Ron Paul told me he's pretty sure it's not. I don't know what Ron Paul knows, but it hasn't been audited since 53. So and now Trump says he wants to go down there and check it out. I don't know. I mean, and by the way, I mean, it points out the difficulty with gold versus Bitcoin. And don't get me wrong, I'm a gold guy. I've always been a gold guy, still support gold, but you can't verify it, right? You don't have a blockchain. You can't see it. Mm-hmm. China says they've got 2,000 tons. I think they've got 20,000 tons, right? It's very hard to figure out where the gold is. Oh, and by the way, how do you know the bar is real? Because we found tungsten coated bars, right? So
do you think that we're going to go back to ZERP, zero interest rate policy?
Yeah, well, I think they may have to. I mean, it comes down to how this unfolds and if something breaks. I mean, I think one pattern we have seen is that the Federal Reserve has two mandates, but really a third unspoken. The two Fed mandates, as in the 78 Act that they passed, are, manage towards full employment and price stability. And of course, they've come to define price stability as 2%, which is a lie. But for the sake of argument, that's what they're supposed to be doing. The third mandate that they've talked about a lot and acted on, but it's not written in the law, is what I call functioning financial markets. Mm-hmm. And so, and the math would suggest that you cannot grow GDP at 8% a year, grow debt at 8% a year and grow GDP at 4% a year without eventually that widened gap creating discomfort and a break in the financial markets. That's Hirschhorn's point of 130% debt to GDP. And so when that occurs, everything's off the table. I mean, there was a Powell pivot in 2019. I mean, Powell tried, when Powell first got into office, he actually tried to tighten. He wanted to go back to a smaller balance sheet. And, the bond market threw up on it and said, no way. And he had to pivot, right? And then COVID came along and there was a crisis there and they pivoted again. And in 08, they pivoted. I mean, if we see the markets indicating that there's true failure in the financial system, they've only got one tool, Natalie. The tool is the printer, and they're going to just run it hot. And so whether it's ZERP or, maybe they take it to 3 or 4%, who knows? But we know they have to create more monetary units mathematically or else the thing collapses. And there's not supply because those people who would be selling the move-up homes to the young families trying to buy a home, they're at a 3% mortgage. They can't afford the move-up home because it's 7%.
No,
so,
but people are waiting for it to come back down to that, and I just don't think it is.
That all depends on how things unfold. I mean, if they unfold in the way I'm describing, where we have another crisis, you can be sure that they will take rates down. And Trump and Bissett, to their credit, I'm not sure how they're going to do it, but they have said they want lower interest rates. Now, okay, fine, and that may actually, and Groman even says that may actually be called for. I mean, lower interest, but one thing is for sure: if they get lower interest rates, they're going to get more inflation. Because, today you're really not, I mean, that's the other thing. The book talks about how the inflation numbers are doctored, right? I mean, they're a joke, right? I mean, we all know inflation's not 3%. I mean, go to the supermarket, right? I mean, go look at your car insurance bill. Look at anything. It's not 3%. Look at your healthcare. So, eventually, and these are the three things I watch. I watch the price of gold. I watch the price of Bitcoin, and I watch the bond market. And so we'll know there's a problem if the 10-year goes over 5%. Because the last time the 10-year went over 5% in the fall of 2023, 12 Fed governors came out within 3 weeks and said, well, the rate hiking cycle's over.
Right.
They had to talk it down. They cannot live with high interest rates. And eventually, if enough people lose confidence in the bond market, what's going to happen, this is the debt, death, doom loop that I know you're going to talk about James with next, that they'll basically, the Fed will have to buy the bonds. And that's third world behavior. That's printing money to pay for your debt.
Right.
And you start down that path, and pretty soon the entire bond market is going to look at the Fed and say, sold to you. Right. I mean, and the entire, 36 trillion sold to the Fed, and the Fed's got a $7 trillion balance sheet. That's not going to work.
Lepard supports hard assets like gold and Bitcoin because he thinks that the current monetary system is essentially broken because of the devaluation of fiat currency, excessive money printing, and growing government debt. Because gold is rare, strong, and widely accepted, it has long been a dependable store of value. Gold is immune to inflation and governmental manipulation because it cannot be created out of thin air like fiat money can. Given that investors frequently turn to gold as a haven during times of crisis, Lepard sees gold as a hedge against economic instability. It has a reputation as a reliable asset for protecting wealth during recessions and currency collapses because of its steady value over thousands of years. Lepard claims that Bitcoin is an even more innovative type of sound currency. It adds portability, divisibility, and a decentralized structure that removes the need to trust governments or central banks while still retaining the scarcity and inflation resistance of gold. Bitcoin cannot be inflated like fiat money because it has a fixed supply of 21 million coins. In a world where governments regularly manipulate financial systems for their own gain, Lepard believes that its decentralized network is essential because it prevents any one entity from controlling it. Lepard thinks Bitcoin will become a more important asset for preserving wealth as more people lose faith in traditional finance. Let's go back to the interview now.
Absolutely right. And Bissett has actually said something that's contradictory. He said, well, we could have a strong dollar with a lower valuation. And so what it tells me is that they're going to work very hard to devalue the dollar in gold and Bitcoin terms. And to these tariffs, they're going to try and look after America first. And these countries that are important to us, they're not going to have the right to do that without paying a higher tariff. And that's probably a good thing when you consider it for the blue collar worker and the American middle class. The negative is tariffs are inflationary. any way you want to look at it. And so again, back to the book, back to the investment advice piece of the book, we've got, I mean, people have been fooled. They watched a deflationary trend take place from 1980 to 2020. Deflation consistently. And by the way, the system should have deflation. I mean, that's Jeff's point, right? Technology makes things cheaper. And deflation, by the way, is good. Of course, Keynesians won't say that, but it is. But what they're going to have to do, and this is again Jeff's point, they're trying to run a financial system that needs inflation on top of a deflationary world. Doesn't work. It just doesn't work. And so I'm going to bet on the deflationary world winning and the financial system getting radically transformed so that we're going to, in 10 or 15 years, be on a full Bitcoin standard.
Right.
Totally agree. And that's the whole point. And the markets are telling us that. The markets are saying that. That's why Bitcoin's at record highs. That's why gold is bumping up against record highs. I mean, the world has figured out that the U.S. is bankrupt or effectively bankrupt. And don't get me wrong, there are things we can do to get out of this. This doesn't have to be doom and gloom. I mean, I was at a speech recently and an economist stood up and he said, look, Larry, if they really decided they wanted to trim back all these entitlements and, reduce the military footprint, they could make things better. And by the way, Doge will make things better. I mean, there are positive things that will get us going in the right direction. But what I would suggest is these problems are really big and they're just not going to get fully solved without some kind of a monetary restructuring. I'm very much a classical liberal or libertarian. And I just personally believe that what happened in our country and in the world was that centralization made a lot of sense for a lot of years. And that, we built railroads, we built steel production, we built auto production, we built all the things that made the modern world. And we did it through economies of scale. You did things bigger, more capital, faster, and everything got cheaper as a result. What happened in 46 and in World War II is we got to the point where we saw diseconomies of scale. Big shit didn't work. How did big shit not work? A country, Germany, went nuts because they elected a leader who decided to start a war that killed 40 or 50 million people. And what that informed us is that big centralized organizations are dangerous because they can be taken over by a madman. And around the same time, the technology started developing, and the microprocessor got developed, and we started seeing a trend. So what happened is we got to the stage where we had diseconomies of large scale, and so now where we're going is we're going in the other direction. And thank God, and this is the bright news about everything I've talked about in the book, that we are decentralizing the world. And why do we need a big federal government? I mean, why do we need collectivism? Why do we need to, tax some people to support other people? Why can't, I truly believe that the average American, and I truly believe that the founding documents of this country, the underlying premise is it's a game, and we know that some are more talented than others and they will thrive versus others. And that's the way life is. You can't, not everybody's equal, but what we all want is we want fair. And what we don't have now, we have is unfair. The people in power have rigged the game. And so, for those who argue for collectivism, I would say you really don't want that, because who's going to run the collective? And, maybe this time it's a good team you like, but maybe the next team you don't like, right? How about we all get a vote in a distributed, decentralized system where the money is the same for everybody, nobody has an advantage, and it's fair, right? How about that? That is much more likely to give happiness and satisfaction and to get rid of all this political sniping that we got going on. That's my belief.
Lepard cautions that a monetary crisis is imminent and that fiat currencies will lose value quickly. He sees tangible assets like Bitcoin and gold as crucial instruments for safeguarding financial futures in such a setting. Although gold has demonstrated its dependability over time, Bitcoin provides a cutting-edge, digital substitute that can prosper in the era of rapid technological development. Investors can safeguard themselves against currency devaluation and the eventual collapse of the current financial system by holding these assets. Securing wealth and sound money is more important than ever as the global financial system grows more unstable. Lepard highlights how urgent it is to get ready for the fallout from careless monetary policies, because central banks may react by printing large amounts of money, which would only make inflation and economic distortions worse. However, Bitcoin and gold represent the final strongholds of financial security, with Bitcoin offering a decentralized, cutting-edge technological solution for the digital age and gold offering centuries of demonstrated resilience. It is evident from Lepard's observations that individuals who take immediate action and diversify into tangible assets will be better prepared to handle the uncertain economic future. Which is a better hedge against the impending crisis, in your opinion? Gold or Bitcoin? Your opinions would be greatly appreciated. Please remember to like this video, subscribe to the channel, and enable post notifications if you thought this discussion was helpful, so you don't miss any updates. We appreciate your time and hope to see you in the next video.